to our main event. I've been looking forward to this. Brendan and I talked about this a while ago. Some of you know Yee has been on a number of our calls. And the best thing is they're based right here in Seattle. And they're doing some important work in terms of keeping an eye on what's actually going on in the startup ecosystem around IoT and other emerging technologies. Maybe we can start with some introductions. Brendan, do you want to start and just tell us about yourself and how you ended up here?
Sure. Well, thanks for having us, Hans. I really appreciated this group, learned a lot from it, just from the audience, and so really happy to be sharing my perspective today. I'm a senior industry analyst at PitchBook Data, where I cover the venture ecosystem for AI, IoT, and information security as well. So we'll be going through my most recent research update around venture ecosystem trends.
Cool, thank you. Yee?
Hi, everyone. My name is Yee. I'm a senior vice president at Cascadia. I've been with the firm for just a little over 6 years now. I spent closer to coming up on a decade in Chicago with various other institutions. Here in Seattle with Cascadia, I've predominantly focused around energy transition as well as industrial or Industry 4.0, largely around IoT. And we can dig in further on, obviously, the firm and my background beyond that.
All right. So I'm going to stop sharing my screen, Brendan, if you want to go for it. Okay, it's all yours.
Just a moment. So a bit of background on PitchBook, just to start with. We are a financial technology company with a data platform tracking activity across capital markets, including venture capital, private equity, and public markets as well. And recently we've added independent industry research, incorporating our financial data along with market research. And I'm part of that emerging technology team that covers a range of verticals and particularly the venture ecosystems. Yee.
Awesome. And so Cascadia, we're a middle market investment bank. We were founded in kind of the .com era. What we were largely doing early in our careers was around emerging technology. So companies that were raising capital, growth equity capital in and around any sort of technology sector. Vast majority of our clients were Microsoft, ex-Microsoft executives. So I have a lot of kind of background doing that. And then what we saw through the decade in the next kind of 15 years beyond that is we started focusing more on the industry end market. So today we have not only technology practices, we also have an industrial practice, consumer retail, agriculture, food bev, and where I sit in the energy and applied technology group. And what we recently realized was that a lot of the companies, including the investors and buyers, were looking at investing internally in Industry 4.0. So automation, robotics, AI, IoT. And what we thought is that with our background in the industry, that we wanted to be able to develop kind of our expertise and kind of, merge the two together from a technology perspective, also into the industry. So last year we announced a group that's called Robotics, AI, Automation. It is a bit of a mouthful, but for lack of better terminology, it's really just our Industry 4.0. I specifically cover IoT within that practice. And again, what we do is we advise companies that are either raising growth equity capital. We typically can do Series B plus all the way to an M&A exit. So one other thing is a plug to Brendan is we are a PitchBook subscriber. So a lot of the data that we gather just on the day-to-day is through PitchBook. So it's a great platform.
Great. Today we're going to be covering some topics that are near and dear to both of us, and really, bringing in our PitchBook's perspective, really aggregating data around IoT, adoption growth, and then venture funding as well. So we'll both be sharing our perspectives on each of these topics across market size, venture investment, and then use cases seeing high adoption, and open to thoughts and questions throughout the presentation. We'll be monitoring the chat window here, and so definitely open to perspectives from anyone here as to the dynamics they're seeing in the IoT industry as well. So to start with the overall market size, at PitchBook, we look at the product categories that see high venture funding, and really map that to those areas that are also growing in terms of end user spending, to see which segments have addressable markets that can support large startups. And so to look at that more granularly, obviously there are a lot of estimates out there that put IoT as a $1 trillion industry. In practice, we see that startups really need to focus on particular use cases and tend to fall into distinct product categories to really focus their technologies and value propositions. So we break the market down into enabling technologies, including hardware, networking, and software, and also use case specific applications, including industrial, connected buildings, and connected services. Those services including healthcare, cities, and vehicles, and really looking at which of those markets is the largest and growing the most quickly, can be an important determinant of which startups end up achieving the best outcomes. So, as part of our research, we publish a biannual update covering trends in spending and venture funding, and so obviously that's been a very dynamic exercise throughout the past year, with a number of rapidly changing data points and macroeconomic forecasts shifting the overall performance of the IoT industry. And in our first half update, there were a number of use cases that had really been frozen in terms of their adoption, and led us to see a number of use cases declining. Really, with the thawing of the economy in Q4, we started to see IoT projects that were deferred start to be implemented, and really gave us an indication of where there's going to be high growth going forward. And so, in the largest use case of IoT, industrial IoT, we see that there was low growth from 2019 to 2020, but that 2021 should really experience a demand snapback and continued double-digit growth from 2021, particularly driven by manufacturing and supply chain projects that were deferred, and that's a category that we expect to see over 30% growth in the coming year, just given the urgency to transform manufacturing operations and gain more agility in supply chains. And so that's a market that we expect to reach over $200 billion in spending across hardware, software, and networking. Energy and utilities and agriculture are also large industries that can support startups. They're growing slightly less than the manufacturing and supply chain category, but also are starting to rebound from some of the delayed projects in terms of smart grid rollouts and field sensors that can make it an overall high growth year for the largest segment of IoT. In connected buildings, we think there's been a more kind of fundamental shift in demand as a result of the pandemic, given changes in office occupancy and retail. It's a category that experienced a decline in retail spending in 2020 and should see a rebound across the board, but not quite to the level that it was on pace for before, just given changing demand for brick and mortar retail devices and then also smart office sensors overall. There are some use cases that will grow quickly, including occupancy monitoring. Smart home has continued to grow strongly at nearly 20% rate for devices like smart speakers, and is going to drive higher growth overall in the segment. But it's still a smaller market than industrial IoT, and it's going to face some challenges in kind of non-residential applications. And last, connected services is a combination of use cases that are used to serve basic municipal needs, including transportation, healthcare, and urban development. And there are obviously connected healthcare is the category that grew the most strongly, still in double digits in 2020, driven by telemedicine devices nearly doubling, and starting to see larger venture deals as well from that. There is potentially going to be some slowing growth after the pandemic, given the kind of high rate of adoption that's been seen through it. But areas like medication management in particular are seeing some technical innovations that are going to still enable growth of over 20%. And then in the vehicles market, that was obviously a declining use case in 2020, but an area that we expect to also rebound over 20% as connected cars start to be produced at a higher rate, and then also incorporate more advanced connectivity technology. So kind of given that high level backdrop, it's clear that there is solid growth forecast after a very rocky year, and there are some use cases that are particularly standing out to drive that growth. I'll hand it over to Yee to go through some of those.
Yeah, so on this next slide, you could tell that a banker put this together because the growth rates here are higher than what PitchBook is showing. In general, we're spot on, right? So the industrial, transportation, supply chain, those are kind of major focuses of IoT spend that we've seen. Obviously, all the use cases that Brendan talked about are, we'll talk about those in more detail later, but they're all what I would consider the low-hanging fruit that all the different applications and end uses of IoT are relevant for. Some of the, I think, unique things here is that, again, going back to what Cascadia saw in that across all of these different end markets, there is a need to improve something, to see some sort of visibility into the asset, into the facility, and gathering data and being able to do something with that data to make something improve, make it cheaper, make it more cost effective. So again, IoT is something that continues to grow. We think that the market has a lot of room for continuous improvement. There's obviously a ton of different platforms that are out there, and that is really what we see as an opportunity, from either technology or from an investment banking perspective. And really, who's going to win out are people that can develop, innovative technology that others cannot. I've sat in on a number of these different IoT hub meetings, and people are talking about open source and open platforms. And we're not only seeing that in IoT, but we're seeing that across, even on the utility side, where typically people are very concerned about security and cyber security in particular. But when you have the ability to add other disparate sort of technologies on top to get some sort of either analytics or a control piece or an application to a platform, I think it becomes very important.
That goes right to a question that was asked about the largest valuation drivers for early stage companies, pre-revenue or with first revenues. From what we can see, startups that are able to bring data ingestion and also AI analytics, are able to achieve higher valuations at an early stage, given some of those challenges with interoperability and then also predictive analytics. So I think in terms of what you mentioned with open source and open platforms, I think that can make a big difference versus potentially, and then also cybersecurity, as you mentioned, versus kind of bringing more commodity solutions in a kind of new package.
Yeah, I think if the question, I'm reading Bert's question on the largest valuation drivers for early stage companies. Really, the way that we look at what is going to drive value for a company, the first step is probably around talk about stage, right? So is a product commercialized? Is it just an idea that is in pilot phase? Is it an idea that's in someone's garage? Or do you have customers that are purchasing the technology and deploying it? And then I would say that there you would look at probably revenue and what type of revenue is it? Is it recurring revenue? Is it one-time revenue? Or is it service revenue, right? So when we look at how do you value the revenue stream, let's just take an earlier stage company and look through how do you value that. Those different revenue streams may get different valuation multiples. And we don't, we can dive into that if that's of interest to you, Bert. But does that kind of answer your question? Is that what you're looking for?
It's a great start. And clearly in our financial plans, we look. I mean, if there's no avatar, right? How we value it, right? We have an energy play, which can go from solar to wind to electric vehicles to infrastructure, anywhere where power electronics is. So that's a really big upside. And that's my plan to really see where the exit valuation comes in. But at this early stage, right, everything has to work together, right? So each one has a component of the IoT ecosystem. Is it the hardware sensing part? Is it the network part? Is it the interlayer part? Like, Cisco acquired Jasper, right, for a certain reason. Or is it the back-end machine learning part? And if any of these chain links breaks, poof, the value is gone. So we're trying to carve out our focus on the sensing side, since we believe that the quality of the data is utmost important. That actually brings up the second question I was about to post. Since when everybody in open source works with every value, where's the value? Where's the differentiation? So my question also alludes to, next to the generic part of, okay, yes, show me the money, right? How much did you turn? Is the opportunity of value when you say, okay, focus on the data quality, right? So we can focus on the data quality as a driver, or I can push our resource to say, really, although we protected our data quality now, we really should work on differentiating machine learning algorithms, right? Not that you pull down by open source, because everybody can do this. But yep, the investment community is somehow magnetically more attracted to the magic that you magically can make sense out of the data, and they don't even care about the quality of data, which I think is a fault, but I need to sell that.
Yeah, no, it's a very relevant topic. So one of our clients, it's in the IoT space. They're an end-to-end sort of platform company. What challenges I've seen with IoT is that there's commonly this hybrid. So you have hardware, you have service to implement, and then you have the software, right? You can clearly delineate the valuations that IoT companies that are more of this hybrid model, they generally get a lesser value. And this is all, you could just say their revenue multiple valuations tend to be less. But when you look at the AI ML, the ones that have either data ingestion, data analytics, data science around it, there is something there that it could be a market trend. It could be just the hype word, but they tend to see stronger multiples. And one particular example, which we can argue if it's a good example or not, is C3. And Brendan and I had this conversation back and forth a couple of weeks ago, right? So a few years ago, C3 used to be called C3 IoT. They jumped on the bandwagon and said they're now an AI company, or they have always been an AI company. Valuations for C3 AI were 40x of revenue whenever they raised capital and then whenever they IPO'd. So extremely strong valuations. That's one use case or one example case of IoT versus AI. I would say don't try to just go for what is the high valuation. There's two things that you need to think about. Technology is a differentiated, and then two, scaling. So you could be a hardware company, but you could be scaled, enormously like a Samsara, and they get extremely strong valuation. So you have to think about the business from both of those aspects. And you can't just take one way or the other and expect to kind of see those strong valuations one way or the other.
That's great advice. Thank you.
Cool. Thank you, Brad.
That leads nicely into our next section on venture investment trends. We can cover the entire universe of IoT startups. We have around 3,000 of them in our database, globally speaking. Looking at funding trends, we see that 2020 remained a strong year for venture funding, matching a record value of 11.1 billion. There were some concerning signals in that, just in that early stage deals reached their lowest point since 2016, and that deal count overall declined for a second consecutive year, really suggesting that, as in other areas of venture, investors consolidated their interest into kind of late stage winners in certain industries and didn't necessarily provide enough backing. So we saw a number of early stage startups raise venture debt and apply for PPP loans, saw a few categories stand out in terms of those that were able to raise a large amount of funding, including chipsets themselves that have an IoT use case, manufacturing and supply chain, connected vehicles, smart home, and IoT security. In terms of pure play IoT platform software or sensors and sensor systems, we didn't see increases in those areas, suggesting that those startups that are really targeted at specific use cases and particular technologies were still able to continue to raise, as opposed to those that were more generalist. And looking at the amount of venture funding against the growth that we're expecting for this coming year, we see that there's a real overlap between the largest markets in IoT, their growth that's expected in a demand snapback scenario, and then also where venture investors are placing their bets, particularly in driver assistance and connected vehicles and LiDAR, and then manufacturing and supply chain, particularly in kind of factory automation and predictive maintenance. And so, some of the other use cases we're not expecting to grow quite as strongly, given that that absence of a lagging effect for aviation and transportation, and venture activity is somewhat reflected that those markets have somewhat lesser funding. Although connected healthcare and smart home have been of high interest to consumer venture investors, and saw some large deals throughout the year.
Brendan, did you talk about connected buildings at all in that prior slide? And the reason I'm asking is because we've seen a very big shift in the past year around ESG investing. So there's a lot of Goldman, all the major institutions, and now are kind of forcing this conversation with even the oil field companies into the environmental and energy storage and electrification and renewables. So that is a big thesis that everyone, including private equities down to corporate strategics, are looking at. How do they invest? How do they improve and change the dynamics of their own operations? And we've certainly seen that in our clients that we're currently representing at the same time. Sorry to interrupt, Brendan.
Yeah, no, it's a good point, and it is a category that doubled in venture funding in 2020, although from a lower base to around 500 million in commercial real estate in particular. I've certainly seen that there were some high needs that drove funding requirements in terms of contactless locks and occupancy monitoring. The energy efficiency, haven't necessarily seen large companies built in that space as yet, but certainly see that there are some startups that are kind of bridging some of the different IT systems that are needed to manage those better and respond to demand within buildings, which I think is still an unsolved problem given the state of siloed sensor systems currently. For BERT, ESG investing refers to environmental, social, and governance, kind of emphasizing non-financial factors in investment decision making. So we do see that exits in particular were achieved a breakthrough in 2020, even through the pandemic, as we saw 4 exits of $1 billion or more, really, and hadn't seen that scale of exit in the space since Ring and Nest exited in the smart home space, so that demonstrated once again that large companies can be built in this industry, even though there had been challenges and some less than ideal venture outcomes. That high value of 14 billion was really driven by 4 exits in particular, as I mentioned. 2 chipset exits for Cambricon Technologies and VeriSilicon on the Shanghai Stock Exchange, and then the record IoT software exit for C3 AI, as you mentioned, formerly C3 IoT, but really still with its customer base concentrated in oil and gas, utilities, and manufacturing. Over 40% of revenue coming from those industries. So showing that that there is value to just apply the right analytics on top of sensors that are out in the field already. And then 5G networking is clearly a high priority for telecoms, such as Ericsson, which acquired a connectivity software company, Cradlepoint, for over $1 billion to expand its private 5G efforts. So those aren't necessarily very targeted startups. They are more general platforms, but they do show that the size of the market can result in a high company value as well. Yee also has a perspective on the the broader deal-making ecosystem beyond venture.
Yeah. So our slide here is it should mirror Brendan's, I guess, analysis in that we source from the same place. So really, it's these slides, these charts are just showcasing how active the space is. I would say that 2020 is overly emphasized by the announced NVIDIA takeover of ARM, which sounds like it's not going to happen. So that that big chunk there in the M&A section probably goes away, but it's still a very active market. Brendan is right, and we read all the same kind of information that in 2020 deal activity slowed slightly, just from a numbers perspective. Value obviously is quite high, and quite a bit higher. So the size of deals are moving up. The number of deals, were a little bit on pause, probably mostly due to COVID, some due to the supply chain issues, and again, this is all around the hardware components of IoT and implementations from kind of corporates. On the next slide, we talk about the valuation. And again, this is driven a lot by certain deals. What we try to do here is take out any of the outliers that are in this top 25% or top 25 percentile in terms of multiples. These are typically kind of later stage VC plus sort of IoT deals. And again, this is all sourced from PitchBook. So you can see that valuations have been quite high. Again, this if you were to dive deeper into the data here, you can cut IoT specific versus more AI ML data sciences. And a lot of these do include some of the data science transactions here, which is why you see such strong double digits. But C3 is part of the reason why some of these multiples are very high. And I don't think you can get away. The last thing I want to say is I don't think you can get away from talking about SPACs in this market today. It's extremely active. I think the most active SPACs were around kind of the electrification side, but companies like Latch, which fit into the connected building, smart home space, that was a SPAC by Tishman, who obviously is a big asset owner. And then Samsara was one of the big big investments, not a SPAC necessarily, but they were one of the big ones that happened in 2000. And then, yeah, I think those are largely, ones that I would point to kind of in the IoT / Industry 4.0 sort of world.
Yeah, and we got a good news flash in the comments here from Chad on announced IPO for Tuya, or Tuya Smart, a China-based company that's listing on the New York Stock Exchange and just an IPO'd today. So not something that we tracked in our 2020 update, and not a company that had raised significant venture funding in some time, but certainly a further indication that particularly in the Chinese economy, IoT companies are growing quite large. In this case, to over 10 billion, and it's, I think there's been a lot of progress made in that market in particular, around government incentives and then kind of high venture investment that have enabled those companies to gain a scale that U.S.-based IoT companies haven't yet achieved. So one of
the interesting things about Tuya is that they're predominantly when you look at it, they're predominantly a products company, right? So they sell these plugs, light bulbs. They're focused more on kind of what I would consider more of a commoditized IoT application. And the valuation that they got was extreme. I think it was very strong. I mean, it was like, was it couple billion. I haven't pulled the numbers yet on Tuya exactly, but it does show to the scale again, right? The scale scope versus just around how innovative is the technology. We work with companies that are, competing against Tuya in some form or fashion. And, there is a lot of discussion behind the scenes around what they can do versus what Tuya can't do. But again, Tuya reached 115 or 120 million in revenue, and that is substantial. There's big market in China, and obviously a lot of the manufacturing relationships that they have allow them to source it extremely cheaply. But it is a very I think meaningful transaction to IoT. So it's definitely not one that we are ignoring.
Hey guys, just want to step in. So we have a few questions. If you want, whenever you want to take questions, I can bring folks onto stage. And again, if you have a question, please ask in the question session, and we'll bring you onto stage. Now.
I'm losing Hans a bit there.
Yeah.
Yeah, I did see a question I missed from Brandon regarding the research that's available on the PitchBook platform. I'd be happy to send an executive summary of it. We'll have our email up in just a moment. Could just get through this last section here and then kind of open up for general questions. Kind of diving in a bit more specifically to kind of where that all of that deal data leads us to believe there's outstanding opportunities within IoT. I'll give it to you, Yee.
All right, so this is a heat map, and really it's a use case sort of look at various different industries. Obviously, it's not independent based on what is listed here, but you can see all the different use cases across a multitude of different industries. And what I like to think is the low-hanging fruit in terms of use case are really around the next slide, and that tends to be around kind of connectivity. So making a simple object such as a TV, how can you connect that to the cloud? How can you connect that with Wi-Fi? That's the most simplistic thing. You can extrapolate that to a number of different use cases in the industrial world, with equipment, food service equipment, a piece of machinery, an HVAC, cooler chiller plant. And then you have asset tracking, which is really just tracking the physical location of assets. As you start looking at that, you can provide use cases around geofencing, and then there's also the ability to track people. I think that's definitely a healthcare within the hospital and around COVID. So those are different use cases within asset tracking. The third one that I would say is around kind of performance monitoring and management. This is really just capturing data that's coming out in the field from a particular piece of equipment or a full facility on how it's operating from an efficiency perspective. And then around kind of the AI ML piece that we were talking about earlier around predictive maintenance. Which is, I think it's pretty self-explanatory. You guys, know how this, you typically know how this operates, but it's really to avoid any breakdowns when there's downtime. There's cost opportunities that are lost there. And then the fifth one that I see quite often is facility management. This is where you talk about energy efficiency. You talk about, automation within a building. And then also safety around the fire systems and surveillance. And then the last one is security. So anywhere from smart cities to smart businesses, where they're able to monitor kind of real time of infrastructure just to make sure that it's safe. And then it can also turn into more of a cybersecurity sort of application.
Definitely seen a lot of those use cases grow as well, and try to connect some of these themes to growth for startups in particular. Given that some of these opportunities are best addressed by large industrial incumbents, and others are kind of more susceptible to disruption from startups. So a couple high growth areas in particular that have stood out in our venture data include building structure monitoring. That's really recently had kind of drones applied to it to improve on condition monitoring, and 5x5 Technologies has raised a Series B at a higher deal size, and also partnered with AWS to do 3D modeling off of that data. Mine monitoring is an area that incumbents have stayed away from, given the remote aspect of it, limited connectivity, high risk for those projects. IntelliSense has been able to more than double its valuation in the past year. Really doing a custom digital twin platform for mining equipment. Manufacturing process automation really struggles from a siloed data sources, and Seek has attracted some outstanding strategic investors to use process history databases that exist for some of this equipment to gain a single view of all the equipment in a factory, where that data might have been in separate systems before. And last, in cold chain monitoring, we've talked a bit about asset tracking, but the ability to measure temperature in real time using a combination of different sensors, and ensure that vaccine deliveries are kept safe, is an area that's supporting a relatively high valuation for a smart supply chain company, and Biolog ID, and so other areas might be better addressed by incumbents, but certainly see that startups are able to scale in some areas. So with that, we'll put our contact information up here. So another question about slides. Feel free to reach out to us. We can email the slides over. And know that Hans, there's a hand raised, and some terrific thoughts on the IoT chip market as well.
All right, so I'm going to start bringing folks onto the stage. I'll go through the order here. Hey, Carl, you have multiple questions. I'll bring you onto stage. If you could stick to one, and then I'll bring you back on again, because there's quite a few. So I don't know if Carl is still around. No, it looks like he left. All right, who else? Okay, there's a, okay. Oh, here we go. Welcome, Carl. Gonna go ahead, ask your question. No. All right, I'm gonna bring Kia on.
Hello, can you hear me?
Hey, Kia. Yeah, go for it.
Sorry, thanks for the great talk. I was wondering, how do you see the IoT market and the medical side? You did mention something about it's being used in pharmacies and medication, etc. So I was wondering if you can elaborate on that a little bit more.
Yeah, so in medication management, the ability to track the medication usage by medical professionals, and or in some cases apply tiny machine learning to kind of bottles of devices is an area that enables better adherence to medical prescriptions, and so that's an area that the market research finds is kind of still at a low base, but it has the potential to grow over 30% in 2021 to over a $300 million market for those devices, and so that would, relatively speaking, put it on track to approach the size of telemedicine devices by 2024. So it's an area that hasn't seen large startups be created yet, but an area for kind of innovation around the measurement of medicine distribution.
Yeah, most of what I've seen in the healthcare space is tracking equipment within a hospital system. There's also predictive maintenance around the higher dollar pieces of equipment within the research facilities and the laboratories. And then I would say more on the AI, more maybe even robotic side, we're seeing a lot of like surgery. So we did a deal recently that was a robotic surgery company, and that maybe less IoT, but those generally see pretty high valuations because they're very, very specialized.
Thanks for the question, Kia.
Yeah, thanks, Kia. All right, I'll try bringing Carl again. Okay, Carl, can you hear? There you go. Can see you. All right. Go ahead, Carl. No? Do you want to ask, or can you? All right, I'm gonna come back to you if that's all right.
Well, we do have a great question from him in the chat. I could read it.
Yeah, if you want to go for it, I'll bring Stuart on.
Hey, can you guys hear me?
Hi, Stuart.
Yep.
Hey, cool. Okay. Yeah, so I'm working on a IoT product that includes, a software component. And one of the things that people have been telling me is really to focus on the software and services side, that VCs do not want to invest in hardware and they don't want to invest in devices. The margins aren't good. The growth isn't good. That that the value and the growth opportunities are on the software and services side. I'm curious to hear what you guys think of that.
It's very, very common that I would say like Silicon Valley, right? They're very focused on SaaS as a business model. So it's all about recurring revenue. Again, it is a catch-22. I don't think that if your sole purpose is to go find funding, you probably want to think about this. But to me, it's all about scale. So if there's a hardware component, that's fine. But if it enables you to get something that is recurring, that is sticky with customers, and that you can scale, I don't see anything wrong with that. Right? There are firms beyond kind of the traditional Silicon Valley VCs that you see day in, day out that are comfortable with hybrid models. We talk to them. I would say, though, that the vast majority of folks that I've spoken to in the PE VC community are focused around kind of the recurring revenue and that SaaS business model. And that's just, that is how it is. But you really need to think about scaling. So again, commercialization, productization is the first step. If you can gain and get to a certain level, then you think about how do you switch that and convert it into more of a recurring stream.
Cool. Thank you. All right.
Cool. Thank you.
Thank you, Stuart. Okay, Eric.
All right. Can you?
Go ahead, Eric.
Can you? I don't know if you guys can see me, but at least you can hear me. Quick question for you. So we're doing a perishables real-time visibility play that combines IoT with AI. And one of our biggest challenges has been how to get to the point where we can attract enough investor dollars to scale the hardware, the sensors, because we're using continuously connected gateways that are on the pricey side, to be honest. So we did, out of sheer frustration, we did a Reg CF round to just get enough cash so that we could start to scale that, start to do larger pilots, et cetera. We've got folks who are asking for us to provide quotes, and we can't even approach them because we just don't have the volume of sensors to support a big international client. So my question is, does doing a Reg CF for friends and family ahead of pitching a company like Cascadia, is that a plus, a minus, or does not matter? Just curious.
Yeah, I'm not too familiar with Reg CF, but friends and family, it doesn't necessarily hurt. I think where sometimes you can get into complicated structures are where you're a serial capital round raiser, and the investors. It could be VCs, it could be private equities that have extremely aggressive preference stacks and structures that they put into place based on the investment structure that they put. So I'm not as familiar with Reg CF, but friends and family typically is pretty it's non-intrusive.
Okay. I also have run into a lot of folks who talk about supporting early stage ventures, and then if you're a startup and you're doing a couple of pilots and you're not quite to an ARR, they would rather you come back in a couple of years when you're in a different place. Is that common right now? Is ARR a must-have for even an early stage venture right now?
It again depends on the type of firm you're talking with.
Okay.
Most of where you see an investment banker being involved, we speak with kind of the bigger VCs and growth equity. So the minimum that I've really come across in ARR is about 10 million. And it seems like every 10 million you see a certain level. And it really goes back to the firm mandate. So a lot of the LPs and the structures that the funds put in place, they dictate how much capital they want to put into these businesses. And it's usually thematic, right? So IoT may be a theme. But they may want to put in 25, they may want to put in 50, or they may want to put in 100, and they're kind of restricted from putting in anything less than that. Some firms can stretch down and to the technology. But again, going back to your original question, it seems like that first breakpoint in ARR based on a Cascadia sort of process, it's usually around 10 million.
Okay. Is there a hope is there a snowball's chance for those of us who are maybe a couple of years from 10 million? From a
Cascadia, well, so yeah, Cascadia, I mean, we're just think of us as an advisor. So we basically put you in front of a VC, and the way that we get paid is by you successfully raising capital. So if you're raising, 2 to 5 million in capital, you don't want to pay an investment banker like me to do that deal for you, because it doesn't make sense, right? If you're raising 50 million, you may be more open to paying a small portion of that as a fee to an advisor. So yeah, again, if it's in that kind of sub 10 raise, I typically would recommend not speaking with an investment banker.
Okay. Thank you so much.
No problem.
Thanks, Eric. All right. I'm just going to bring the next person on, and I'll get to the other questions in a second here. Okay, Bert. Nope. Okay. So I don't know if you answered this question, Brendan. It's actually from another Brendan. Where can folks access the analysis? Is it all public? So, for example, the report that you just published.
Yeah, I did mention that the report is available on our platform, but I'd be happy to send an executive summary if Brendan could just send an email, or Brandon, that is.
Okay. So I'm just inviting Bob. He has a question, actually a comment about the NVIDIA. Here we go. Oh, Bud is here. And so is Bob. Bob, do you want to go ahead and ask your question, and we'll wait for Bud?
Sure, can you hear me?
Yep, go for it.
It got significantly louder after getting on stage here in my ear here, so apologies. Yeah, it wasn't really so much of a, it was kind of a curious interest to see what your reasoning was in the earlier comment having to do with the NVIDIA ARM acquisition. That certainly was really big news last year, and just wanted to see what I think your comment was. It looks like it's not going to happen, and what the components of that kind of view is right now.
I thought, yeah, I read that it was a regulatory potential chance that they were going to not approve that. I don't have any additional insight beyond there was one article that I read yesterday actually about that deal.
Got it. Yeah, I mean, there's not really more to add to that other than certainly what the implications are quite significant for a primarily independent technology supplier to an entire industry getting then acquired by one of the largest, certainly the largest by market cap silicon suppliers to the industry, then changes the game and the dynamics quite significantly for everybody else in that field. And so,
go ahead.
well, that was pretty much it. That the news is not just significant, but the change in the industry and the dynamics is really quite significant.
Yeah, and the regulatory issues, I mean, around kind of monopoly should not really be an issue from what I've read, right? They don't seem to be overly competitive. They fit different markets, and it would be meaningful from a lot of different perspectives. So I agree with you in that regard. But again, beyond, I guess what I was addressing was that in that 2020 slug in that chart, that a big portion of the M&A was the announced deal that NVIDIA was going to acquire ARM. So.
Right, exactly. 40 billion is a pretty big adder.
Yeah.
Fair enough. Thank you.
Thanks, Bob. Still can't hear you, Carl, I don't think.
I think Carl wrote a question down, and so we could just read that off here for you, Carl.
Yeah.
Given that we're not getting your audio, kind of on the similar subject is you had a comment that the IoT market is highly module market is highly fragmented, and many of the module vendors are from China. Security is important, eSIM and iSIM, and that kind of ARM situation is creating opportunities for other vendors. Certainly, an opportunity that I see, that is kind of being realized with a number of kind of edge processor makers, listing. CameraCon Technologies claim to have developed the world's first deep learning edge processor in 2016. Acronix also recently listed via a SPAC and with high growth forecasts. And there's really a kind of open field for FPGA and microcontroller makers in IoT applications. And so agree with that point about fragmentation, and it's supporting some significant growth for kind of small form factor chip makers, and agreed that secure firmware and ISIM are going to be important for chip makers as well to factor in and probably make acquisitions around, like Maxim Integrated did with Bedrock Automation for secure firmware. So that might have been one of the key topics.
Yeah. All right, Sanjeev had a question. Sanjeev? All right. I guess that's not working either. So let me go read his question. Are you seeing much adoption of 5G in realizing IoT applications? It appears that telcos are still a few years away from having reliable high, medium, and low bandwidth 5G. What are you guys seeing?
I can take that first. Just to say that one of the key findings from the report was really that private 5G is actively being developed now, and really at a breakout quarter in Q4 of 2020, with over 100% quarter-over-quarter growth in publicly disclosed private 5G networks, and it's also an area that developed pent-up demand during the pandemic. As a majority of manufacturing companies reported, pursuing 5G, but a low percentage had actually actualized it, and so I think you see that Nokia and Ericsson are really ramping up private installations, even if we lack some of the standards that we're going to need in 3GPP release 17 for wide area, high bandwidth 5G. So limited to private for now.
I echo what you're saying, Brendan. I've been hearing Nokia, Ericsson. They've been here in the IoT Hub. We've been talking in separate kind of conferences, and they are all very interested in this private 5G in this band. And I think it'd be a huge opportunity. I mean, the trends that I see in IoT today are AIoT. So edge computing, 5G allows for that. And then it really will kind of expand the different use cases with edge. And then obviously digital twin, I think, was one of them that we talked about, but not really that relevant to 5G. So those are all kind of very, very important. I think, when you look back at 3G to 4G, right, it was the use cases, some of those really exploded, just being able to track in real time how much data was coming back and being able to analyze all the different data sets coming back with just 4G alone. So I can imagine all the different use cases that could be, that could evolve with 5G.
Cool. All right. Hang on. So I think we've gone through most of the questions, and we're at 5:20. Oh, here we go. Okay, Jeff, go ahead.
My audio on? You can hear me?
Yes.
Everything?
Yep.
Okay. Yeah, we're a pre-seed startup here in Seattle. We've been going for about 2 years now. We're about to go into our first raise, but we have a long-term plan and a short-term plan and a method to get there. In the pre-seed environment, or in the stage we're raising, is it more productive to go with our immediate customer goals and customer, well, it's basically a consumer play at the beginning, but it's a B2B2C play going forward. So I'm trying to figure out if it's best to focus on the initial customer now in this raise, or focus on the whole long-term plan? We're using IoT, particularly NVIDIA devices, to build standalone ADAS systems and DNS systems that can be retrofitted score, a global driver score, in order to upset insurance actuary services for setting premiums initially on auto insurance policies.
Yeah, I think I mean there's two different things to talk through there in your question. I've worked with a lot of companies that have a shift in terms of what their focus is. So as an example, one of our clients was B2B2C, and they are now shifting to B2B, right, in the telco space. Okay. There is something to say that legacy, at some point in time, it'll be legacy to you, that your technology is deployed in the field and has become commercialized and validated by whatever end user that is. So that would be a good path to go down. Get the validation on the technical side, get a product out into market, and commercialize it. Then, if you can, at the same time, start to develop these other, avenues, and really start focusing on that telematics side. Obviously, there's a ton of telematics companies that are out there. One of which I followed, Zergo, recently sold. It was a private equity to private equity sale, I think. So yeah, I mean that B to B2B, B2B2C to shifting, to something else, that's doable, and you can raise capital on those different types of theses, right? So the first one would be raising seed capital to go build a product to go and hit this initial ecosystem that you want. And then when you've developed that far enough, you have another raise and it goes and hits another sort of end user, right? So that's very common that I've seen.
The problem I'm having though is we actually are engaged with insurance companies right now to go through the insurance company and for the telematics side, but we're also building a crowdfunding campaign to crowdfund an MVP that is directly to consumer. So we're both going both ways right now. So I'm just trying to figure out which way I should focus on the raise, the upcoming raise.
Okay, maybe we can have a separate conversation offline about it. I'm happy to do that.
Yeah, sure. I'll contact you on LinkedIn.
Okay, that works.
Okay, no problem. Thanks.
So thank you guys. This was great.